Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1012th installment of Short-Term Trading Live with Oscar Carboni Traders. The 1012th installment, and here we go. This video is for trading. It's actually for day trading on Tuesday. That's April 23rd, 2013. Traders, the first thing I want you to understand is this. The weekend webinar remains valid for the end of April. The weekend webinar, the video I did over this weekend, the one right before this one, is absolutely valid, remains intact, and we're worried that April is going to be a death knell for U.S. indices because of what I showed you in last night's video. So that's for as this week comes to an end and maybe the first couple of days of next week. For Tuesday, absolute trading. For tomorrow, we are day traders. So we have a longer term view. Like in the next few days, we're going to find out if April's going to take us down like it did for the past 3 years. But for our really short term view, that is trading for Tuesday. We are going to buy this dip. Remember, the weekend webinar remains valid. So keep that in mind. For quick trading on Tuesday, we are looking to buy a dip. You're looking at the E-mini S&P, and traders, right here is where we're looking to get long, and I'll show you what we're looking at. Futures trading is extremely risky and can cause substantial financial loss. Futures trading is certainly not suitable for all trading accounts, and always make sure you know the risks behind trading. Never trade without stops. But here we are, once again, for trading on Tuesday, April 23rd. This has nothing to do with the end of April, where we expect a pullback. This is for trading Tuesday. We are expecting the market to come down somewhere to around this red trading line and move right back up. Why? Well, for day trading, we're breaking above this small channel that was beginning for the downside, and you have support based upon these 3 days right here bouncing off this red line support, and it should come in right around 48 or 50 for trading on Tuesday. So we're going to look to buy into this area right here. Of course, we always have our stops in place. Traders, here's another reason why you have to look at short-term buying this. You held this plateau. All right, so we know we rallied. We got above this red line plateau, held it again, and now we're starting to move higher. So, hey, as day traders, we follow every wiggle. That wiggle tells us, at least for the morning, we're looking to buy the dip on Tuesday and see if it rallies a little bit. So that's your S&P. Let's look at a NASDAQ chart. Traders, the NASDAQ daily bar reminds us that we are still building this really ugly head and shoulders right here. And if that's the case, the likelihood is that we will come down later on this week into next week. But for day trading on Tuesday, you remove all of this and say, what's it doing for Tuesday? And it is gaining some ground here. And we are looking at technical indicators, and they are also starting to gain some ground. You're looking at your slow stochastics. It has gone down into the oversold area and hooked back up. You know, we have lots of indicators. I don't want to show them all to you and bore you, but the indicators are starting to show that for short-term day trading, you may want to just buy into this for now and then see if that head and shoulders pans out. Let's take a look at our Russell. Traders, not much of a difference in the Russell. The Russell still looks the same. You got the shoulder, the head, the shoulder, and that's for slightly longer term trading. For day trading, we are looking for the market to move a bit higher and move up into the right side of the shoulder. So day trading, we're looking for higher levels. You've seen with the S&P E-mini, there's absolute reason to think that could happen. And then you got to remember the larger picture. The larger picture is the DAX, one of the leaders, and the NASDAQ is still steeped in this head and shoulders, as is your Russell. Steeped in this head and shoulders with a smaller head and shoulders in the right shoulder, and you've got the bear flag building. So overall, larger picture, this would be pointing towards the downside. But for a quick day trade on Tuesday, we will be looking to see if this will be a support area, and then we'll start worrying about the weekend webinar and the end of April as this week comes to a close. Traders, quick video just to keep you in tune and in line with today's Omni, where we think the markets can go. Tuesday, we're buying dips, and then as the week progresses, we will once again look back into the weekend webinar and the end of April. Thank you so much for coming to class. Thank you so much for watching my 1012th video. And always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, don't forget, we're buying dips on Tuesday, but we are worried about the end of April for the end of this week. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.